Well, joining us right now is Atul Agarwal. He's director at Mercator Lines. Here's what the numbers look like. Net sales were down 12.9%. Net profit was down 22.9%. Other income was at 14.2 CR compared to none last time. Atul, thanks for joining us. Walk us through the dynamics of freight rates as they exist and how they impacted your numbers, because our belief was that about 60 to 70% of your entire fleet was already booked at fixed prices.
That is correct, but you have looked at my net profit, you have not looked at my EBITDA levels. There is a higher charge of depreciation as also interest, which has gone up from 17 crores in the last quarter to about 43 crores this year, which is about higher by about 141%. And some correction definitely has taken place in the tanker segment. That is how we had forwarded into the dry bulk segment. Looking at the consolidated figure of the dry, that is in the Singapore subsidiary, we have done better this year. Our net profitability for the year has gone up from 174 crore rupees last year to 198 crores.
Is this visibility or picture improving now, or you still feel that maybe this quarter also there's going to be pressure on freight rates, at least the ones which you haven't negotiated in the long-term market?
This quarter, again, there is pressure on the freight rate. These are summer months, and summer months there always is some pressure on the freight rates. Freight rates have already started improving, and from July onwards we feel that the outlook is quite bright.
Right, Manisha joining you here as well. In terms of those freight rates, when do you see those fixed price contracts actually coming to an end, and at what point can we see a change in mix in terms of fixed price and variable price contracts? You see, the one plus that we have this year as against the year which has ended now, we again have got back the MRPL contract, which we had in the year 05 and did not have it last year. So that should add to our top and bottom line. And as far as the fixed contracts are concerned, they are renewable every year, so all are not expiring on the same date. Some which have expired in the month of April and May have been renewed further for a period of 1 year. And some are coming up for renewal in the month of June and July.
Right. This particular fiscal year as we stand, could you tell us if there is any new capacity that will be added within this fiscal, and in which segment would it be? Oil tankers, containers, bulk, whatever else you have?
You see, we are definitely planning to add further capacity in both tankers and dry bulk, but we must also remember one thing: the bulkers which we took over last year were added to the fleet of the company only in the month of August. So this year we'll feel the full impact of those earnings for the whole year. And apart from that, as you are aware that we have also we have placed an order for a jackup oil drilling rig from Singapore. So company has also forwarded into offshore business now.
Right. Let's take a step back. Could you tell us what percentage of all your entire fleet is right now booked, and what is the average time period of that long-term contract, and what fleet is open or kind of susceptible to global freight rates?
Currently, it's about 75% of our fleet is booked on long-term time charters, and only the balance 25% is in the spot market.
Right. Just very quickly, Atul, can you tell us if you still have high volatility in the oil tanker market, because about a year ago it was extremely volatile?
It continues to be so.
All right. Atul, thanks very much for joining us. Of course, Atul Agarwal is Director Mercator Lines, joining us from Mumbai. We'll take a quick break.
Well, when we come back, we'll get you in sugar sector outlook. Reliance now wants to be venturing into sugar space. After that, steel prices in China have moved up. Tata Steel has also increased steel prices. Where are steel prices headed? That's with steel briefing when we come back. And after that, we also got a special interview with Chet Davis.